Hi, this is Alessio. Hope you're well, and I hope you're looking forward to your long and relaxing weekend. In this video, I want to revisit our old friend silver, which we haven't looked at for some time. I haven't mentioned silver for some time, but the chart picture is beginning to look very interesting, and I want to explain to you why. So, first of all, let's just zoom back a bit, and you can see that silver, after a nice, decent rally, let me just remove all those drawings on my chart for a moment. So, after a very decent, very strong rally last year, you may recall in the summer of 2020, we can see that really it had a very tough time after that. It just went a lot of overlapping, sideways action here, a lot of sideways action, as you can see here, which is typical of corrective structures. But in any case, look what's happened here recently. After silver hit 30 bucks, so after silver hit the 30 bucks level there briefly, just briefly, it dropped by 20% to the 200 moving average, the green line you see there on my chart. Now that is important because, take a look, notice that after silver breaks below the 200 moving average, just for a few days, it's now climbing back above it. Okay, notice it's trying to climb back above that 200 moving average. Now you're probably thinking, well, so what? Does it mean anything? Yes, I think it could. This could potentially be a positive sign for silver, and it indicates to me that it's trying to find the bottom. Why? Let me show you an example here. So here are some examples for you. This is the S&P 500. Usually the pattern goes like this. The pattern is that after a strong uptrend, so after a very strong uptrend in the price, when price then pulls back, so when it pulls back to the 200 moving average, like it did here on the S&P, okay, and then moves back above it again. So notice what happens here. Price breaks the 200 moving average here, briefly, just briefly, and then climbs back above it again. So notice we climb back above it again, and as long as price remains above the 200 moving average after breaking it, that becomes a potentially bullish sign. Okay, is a positive sign. And here's another example for you, right over here. Did it again. So the S&P breaks the 200 moving average here, yet again, climbs back above it, so it rallies back above it here, and as long as price remains above that 200 average, that potentially becomes a bullish sign. And by the way, guys, the key word in all of this is something the chartists use. It's called follow through. Okay, I'm sure you've heard this before, follow through. And what does that mean? It means we want to see the price actually persuading us that it's trying to bottom. So let me show you another example here. So here's another example. This is gold in 2017. Notice a similar pattern. So gold here, it dropped to the 200 moving average here, as you can see. So first it breaks it, and then it rallies back above it again. Okay, so a break below, and then climbing back above it again. And as long as we see follow through, that's the key word here. As long as we see follow through above the 200 moving average after breaking above it again, after going above it, that becomes a potentially bullish sign. So we mustn't see any failure. So that means once price gets above the 200 moving average, it must not fail and go back below it again. Because if it fails, if we were to do this, for example, let's say it went above it here, let's say we had a climb back above it here and then falls below it again, that would become a bearish sign. That would invalidate the bullish pattern. So have a look over here. We had a very similar situation here on gold in 2017, first breaking below the 200 average and then moving back above it. And as long as, again, this is the key word that I mentioned to you earlier, as long as we see follow through above the 200 average, as long as we maintain above the 200 average here and not see any failure, that becomes a potentially bullish sign here. So again, a very interesting chart pattern. Here's an example for you, again, also on gold. This is last year in 2020. Very similar situation. After an uptrend, by the way, this is very important. I want to see an uptrend first before the pullback to the 200 moving average. Okay, it's very important. An uptrend and then a pullback to the 200 moving average here. And notice what happened here again. This appears to be a false breakout, false break below the 200 average and then moving back above it again. By the way, there's a psychology to this. In case you're wondering what is the psychology behind this pattern, what I think is happening here is actually a lot of bots, potentially high frequency trading mechanisms that deliberately push the price below the 200 average here. And what happens is, as I'm sure you know, textbooks, and again, most commentators say, oh, okay, price is now below the 200 moving average, so therefore we are now in a bear market. And guys, this is why I keep saying this. Using something arbitrary, like a 200 moving average, as a bear market threshold or criteria is a bad idea. And you see this happening all over the media, all over textbooks, and it's completely wrong because you see, bots and high frequency trading mechanisms They're not stupid. They know that people are expecting this. They know when price falls below the 200 moving average, that is when everybody out there gets very bearish and calling for a bear market. That is incorrect, because usually what happens next is price manages to reverse and go back above it again, as you can see here. So I think the psychology is, at this point, a lot of people just get out. So usually when people hear the word bear market here, they usually sell and get out. And that is usually a false breakout, by the way. So it usually tends to be a false breakout. However, we have to actually see a confirmation by seeing the price going back above the 200 moving average like this. Okay. And again, by the way, notice follow through. That is very important. We need to see follow through above the 200 moving average like this. Now, I want to show you this doesn't work every single time. So I don't want to give the impression that this works every single time. It does not. There is no holy grail when it comes to chart analysis or indeed chart patterns. So, of course, there are plenty of examples when this fails. So here's an example for you on silver. This is 2012, 2013. Here you can see it did bounce successfully for a while, but look over here. Over here we can see price breaking below the 200 moving average and then recovering here, but then it struggles. Notice it really does struggle here to remain above the 200 moving average here. It twice fails. You can see here, failure here and a failure over here on the right-hand side. And usually when price fails to see follow through, when it fails to remain above the 200 moving average here, that's it, it's done. So this is why risk management is so important here. So when price gets above the 200 moving average here, and then failure occurs here, we see price failing to remain above the 200 moving average and then dropping back below it, that is usually not a good sign. It's a bearish sign, and we can see price then plummeted lower. Here's an example for you now on silver. Okay, here's an example for you back in 2010. Again, notice what happens here. Price of silver breaks below the 200 moving average, climbs back above. Now over here, notice something interesting happens here. Over here we see struggle. A lot of struggle here happening here. Price trying to maintain above the 200 moving average, and then finally it does. Finally we see follow through here. So let's look at a chart of silver right now as we're speaking. So you will see that once again, price of silver has managed to pull back to the 200 moving average here after making a top at $30, and now it's managed to pull back to the 200 moving average here. And the big question is, could this be one of those patterns that is trying to now climb back above the 200 average, and could this potentially be a sign of a bottom on silver? Well, here's what I want to show you. Now notice these drawings I've made on my chart here. Let me explain them. I think what's happened is silver has made a corrective drop to double support. Now what is double support? Have a look over here. This is what I call double support, because silver has managed to make a move to two levels of support. What are they? Well, the first one is the bottom of this channel, the bottom of this regression channel, the blue line. That's one support. There is also this yellow line. And you're probably wondering, okay, so what is this yellow line doing here? This, in my view, is the C wave of this corrective drop. So what does that mean? I think this is the A wave, this is the B wave, and this potentially is the C wave. Why? Let me show you. So if you were to do this, if you were to measure this first wave, this drop, so if you were to measure this particular drop here, and then you projected this drop from this level, which I think is the potential B wave, okay? So if you were to measure this potential A wave from the highs of this probable B wave, then 100% projection of this particular move here from here would be down to here, okay? This is 100% projection, which comes to this yellow line. So I think we do have, in my view, an ABC move, ABC potential correction here. And because silver appears to be bouncing from this level, this potentially could be that C wave bottom, okay? So in other words, if that's the case, now let me just make sure I mention this. Silver has to persuade us that that is correct. At the moment, it's still too early to call. I will say this. Here's what I will say. I think the fact that silver is bouncing from this important level, this double support at the bottom of this regression channel, and this 100% projection of this move here, and then projecting that from the top here, the fact that silver is holding this level and bouncing from it, okay, I think that's a good sign. And the fact that silver is moving back above the 200 moving average here, again, the fact that silver is moving back above the 200 moving average, the green line, that is also a positive sign. So I think the odds, the probabilities are leaning towards a potentially bullish bottoming formation here. However, that is only if silver can maintain above the 200 moving average and above 24. So in other words, if silver has bottomed, which appears to be gathering momentum, which appears to be gathering probability, however, if silver is trying to find a bottom here by getting above the 200 average and bouncing from double support, what needs to happen is we need to see follow through above the 21 moving average here, that's the blue line, and above resistance, above the magenta line you're seeing here at 26.27. In other words, before I can say we have a high probability that silver has bottomed and is trying to start an uptrend, what needs to happen is that silver needs to see follow through, ideally above this level, okay? Above that regression channel resistance here, and above that magenta resistance here at 26.27. So if silver is able to do this, if it's able to see follow through, and very importantly, as long as it remains above the 200 average, that green line, okay, and above 24. So as long as silver remains above 24.2 and above the 200 moving average here, and then see follow through above the 21 moving average here, and then we might have a pullback at this point, and then breaking above the 26.27 here, that actually would increase the probability that we have likely bottomed here, and a potential A wave, B wave, and C wave. If silver can finally break through these resistance levels here, okay? If it can do this, that could give us an increased probability that finally silver is seeing some follow through and potentially bottoming here in a potential uptrend continuation. At the moment, it's still too early to call. Again, I will say, I'm going to repeat this, that I think it's a positive sign. I think it is a bullish sign that silver has rallied above the 200 moving average here, like the previous patterns I showed you, and bouncing from double support. So as long as silver can protect that level, as long as silver can remain above the 24.2 level and above the 200 moving average here, and as long as we can see some follow through above resistance levels here, then I think we could potentially see the signs of a bottoming formation, a potential uptrend here on silver. For the moment, this is still a bit too early, but we shall keep watching this. All right, guys, hope this video has helped. Thanks a lot. Bye for now.